I'm Kristy with Kristy Barber Consulting, and I help manufacturing, distribution, e-commerce companies build out their accounting departments. Today we're going to be talking about all things cash flow. That's how to build out a cash flow document, whether that's in Excel, Google Sheets, or whatever, and being able how to manage it, how frequently to manage it, and all the things that you should be aware of as you're trying to make decisions for your company. So the first thing when thinking about cash flow management is how much do you have in your bank to be able to cover expenses? And we all saw during the last couple of years of a lot of businesses folding because of pandemic and various other things that have happened, and it's caused businesses to go out because they didn't have the cash flow ready for it. There's different ideas of how much you need to keep on hand. I always recommend 6 months to be able to cover all of your expenses, and that way it keeps a healthy amount in your bank account, and then also you can have some money set aside on the off chance that there is something crazy that comes up and you can pull from a different account. So when looking at a cash flow statement, you'll get something like that in your accounting software. This is a little bit different. We want to look at a cash flow more so in an Excel spreadsheet and take a look of weekly, what do I have coming in and what do I have going out? You never want to look at your bank statement or your bank account and say, hey, you know what, I have $10,000 in here, I have $2,000 in here. Because the bank doesn't look at things real time. It can't tell that you're going to have a deposit come in today of $5,000 or you're going to pay a bill that's $500. And so you want to be able to build something out in Excel is what I recommend. It works really well. And you can type in maybe you look at it each Monday and you're like, hey, you know what? I know I'm projected to bring in X dollars this week because customers are paying me. And then you can look at it I know I pay all of my vendor bills every Wednesday, every week. I already know what's going to go out, and you can put that number in there. So you can take a beginning balance of what you had from the prior week. Let's use round numbers. Say you had $100,000. You know you're getting $50,000 of income in, so you're now at $150K balance, and you're paying out $20,000 of invoices to vendors. And so you would say, hey, you know what? I know I have $130,000 left, and that would be at the bottom of your Excel spreadsheet. And you may tinker through it during the week if you have some expected things coming up, but it's just a great way to have that picture of what's flowing in and out of your business. And then that way you can make decisions and know, hey, I know maybe I'm coming up on a slow month. Maybe your business is flat for a few months, and so you need to build up more cash to be able to get through the couple of months that are extremely slow. The next part about why you should be building out and managing your cash flow is you want to make sure that you're not leaving money behind. How often do you see your accounts receivable and say, oh my gosh, I have $10,000 sitting out here and I haven't collected it, why? And it helps keep you accountable, and it helps keep your customers accountable as well as paying you on time. So it's a good way to track of, maybe you send an invoice out and they pay every 30 days, or if it's 45 days, and you can kind of mark that out in your cash flow document and say, hey, going out from here, I know this date and this is when I should be receiving this amount. And if you're using QuickBooks or any other software, there's reminders that go out to your customers as well to say, hey, your payment's due, and then that way you don't always have to give them a gentle email or a call because the software will take care of that. And then you'll know, hey, based on this week, I should be receiving X dollars. The third thing that's extremely important is catching your cash flow problems head on. So it's kind of like catching them before they can happen. And I always think of Toyota. Toyota they came out with this ping pong ball thing years ago. And I had to study it in school, and they talked about how they were able to catch things before they really happened based on the color of ping pong ball that would fall down. Think of your cash flow statement like that. It's going to paint a picture of, hey, we're getting to, maybe you have a budget of what you always want to have in your bank account during certain times of the year. As you're building your analysis out, you're seeing, hey, I'm getting low. I'm either going to have to transfer money in from a reserve, or I need to figure out a way to boost my sales. And it's a great way. I know e-commerce clients that do this sometimes, and you'll see there's always people trying to steal your SEO, and then they start stealing your market share, and then all of a sudden you got to go and redo these things. So it's a great way to see, hey, all of a sudden I've tracking my sales and I know they've fallen off because of my cash flow analysis. I hope you learned everything cash flow analysis today. It's a fun, easy way to manage what's coming in and out of your business. You can build a simple Excel spreadsheet and just list out income, and then you can list out some of the main categories of what your expenses are and just keep track of them on a weekly basis. Thanks so much for watching. I hope you learned a lot about cash flow. Check out the description below. I have some free resources to help get you started revamping your accounting department.